Ladies and gentlemen, I'm Danny Seabright, president of the U.S.-UAE Business Council. Welcome today to our webinar about the outlook for the UAE finance sector and the UAE economy for the year ahead. I could not be more delighted to be joined today on this virtual stage with five well-known and very, very much respected experts in the field. First, Ms. Monica Malik, Chief Economist at Abu Dhabi Commercial Bank. Mr. Mohammed Al-Borno, Head of Global Corporate and Investment Banking Coverage at First Abu Dhabi Bank. Mr. Declan Hegarty, Head of Infrastructure Finance and Corporate Banking at SAMIA at JP Morgan Chase. Mr. Sami Kaelo, Chairman and CEO of Morgan Stanley Middle East and North Africa. And Ms. Carla Slim, Head Economist for MENA and Pakistan at Standard & Chartered. All five of these institutions are members of the US-UAE Business Council, and we are very, very pleased to have their support and their help throughout the year, but especially today on this webinar. We're also pleased to have over 200 registered guests for today's discussion, comprising business executives, government officials, and thought leaders from the US and the UAE and the wider region. This includes friends and partners from the UAE Embassy in Washington, D.C., the UAE Consulate General in New York, the U.S. Embassy in Abu Dhabi and the U.S. Consulate General in Dubai, as well as the IMF and the United Nations. We also importantly have economic development reps from 8 states in the United States: Alabama, Florida, Michigan, Minnesota, Missouri, Pennsylvania, Utah, and Virginia. This is a very important focus for the US-UAE Business Council for the last few years, and it will be so in 2021 as well. Outreach beyond Washington, D.C., beyond the Beltway, to helping bring the message of opportunity for business in the UAE more broadly through the United States. We also have on the horn, as I like to say, from my Pentagon days, the Gulf States Institute in Washington, our friend and partner in the think tank world. I should note that this session is on the record, and a video recording of this event will be posted on YouTube soon after its conclusion. I will ask each attendee to make brief opening remarks, and then after all five have made their opening remarks, we will have a moderated Q&A. Attendees will please use the Q&A function at the bottom of your screens for any questions that you might have of the panelists, and we'll make sure to work them into the program. With that, if I could introduce Dr. Monica Malik, Chief Economist at Abu Dhabi Commercial Bank. Dr. Monica Malik has over 20 years of experience as an economist specializing in the MENA region. Monica currently holds the title, if you will, of Chief Economist at Abu Dhabi Commercial Bank, where she established the Economic Research Team. Monica has authored a number of academic books and articles on economic development in the GCC. Dr. Malik, we're really, really pleased to have you here today. The floor is yours.
Thank you very much, Danny, and thank you to the Council for inviting me. For my first few comments, I'd like to focus on the financial conditions during the COVID pandemic in the UAE and start off by highlighting that the conditions remain very supportive, with the central bank moving very quickly to introduce a number of support measures. In fact, the monetary side of the stimulus was much larger than the fiscal side. With all the measures together, it amounted to around 20% of our estimated GDP. Of course, on the fiscal side, there was much greater pressure with the fall in the oil price, fall in non-oil revenues. So it was really, really the monetary side that did the heavy lifting. The measures were there to ensure that there was ample liquidity in the banking sector and funds for the banks to continue to lend to the real economy to support them through this crisis. And what we did see is also the postponements of principal and loans provided direct support to households and corporates, as well as through the banking sector. As I mentioned, liquidity conditions remained very, very accommodative. And we didn't see the marked widening in the interbank rates, the IBOR rates in the UAE versus US LIBOR, as we had seen, for example, in the global economic crisis of 2008 to 2009, 2010. Part of that was also continued access by corporates, governments to the international debt capital markets. That was critical, but also what we saw is the banking sector also, the governments learned from their experiences in the past, and we saw more focus on external borrowing rather than the banking sector to make sure funding was also there for the private sector. Credit demand did pick up at the beginning of in the second quarter of the year. And to us, that really reflects that, there was that positive implementation and take up of these measures, though I would like to highlight there was a marked differential. So much of this, the take up was by GREs. That partly reflects the sectors they're in that were very impacted. But in our view also, there was possibly greater propensity to borrow than the private sector that may be more concerned about the still uncertain outlook. And we've seen private sector, both corporate and retail, contracting this year. So very much a focus on the large government-related entities. We've seen the central bank extend their measures into 2021, which is positive. We see the continued impact of the pandemic as we start the vaccine program. UAE is seeing some of the fastest implementation of that, but we will continue to feel the impact as an externally facing economy. So it's very welcome to have this extension. But once we do have a more global progress with the vaccine program, we see the UAE externally led being one of the strongest recovery stories led by the external sectors. Thank you very much.
Monica, thank you very much. We really appreciate that overview. And there's a point or two that I certainly would like to follow up on afterwards. With that, though, I'd like to introduce Mr. Mohammed Al-Borno from the First Abu Dhabi Bank, the other banking colossus in Abu Dhabi, if you will, alongside ADCB. A seasoned banker with over 24 years of banking and finance experience with international and regional institutions, Mohammed joined the bank in 2012 as Group Regional Head of Corporate Banking for Dubai and the Northern Emirates. He later held various roles, including Head of Institutional Banking Group and subsequently as Head of Corporate and Investment Banking for the UAE. Mohammed, over to you. Thank you very much.
Thank you very much, Danny. Well, I mean, it's widely appreciated that we're living through unprecedented times. And while we've all adapted extraordinarily quickly to doing business in this COVID era, the common view still is that we're not out of the woods just yet. But we are hopeful that we've seen the bottom of this economic cycle, I think back in Q2 last year. And that's in large part thanks, as Monica mentioned, to the record stimulus and subsequently rollout of the vaccine. And we're optimistic now that the economy is edging back towards some degree of normality. I think key to this recovery, again, in particular to the US, to the UAE, was the government and central banks reacted in extraordinary ways, I think, by slashing interest rates and deploying fiscal stimulus. But that being said, there's a persistent overhang, I think, of COVID infection numbers around the world that mean that the governments and central banks can't take their foot off the stimulus pedal just yet, and they continue to do just that. I mean, what the pandemic, I think, has done over the past year was create a greater investor focus on fundamentals, which we believe continue to highlight the relative value appeal of the AA-rated UAE compared to other parts of the world. Now, navigating the UAE and global economy this year is going to continue to require that same quick and agile response. We can't say for sure when a post-COVID environment will arrive or what it'll look like, but we do know that the rollout of the vaccines around the world and the UAE at the forefront of that effort is a significant positive in the right direction. Again, going back to the unprecedented level of support from government, central bank, with stimulus programs across the Emirates and central bank's targeted economic support scheme, they've helped to reduce the impact of the pandemic and allowed us and other financial institutions to continue to support clients and business throughout the crisis. I think, importantly, and Monica touched on this, is that credit markets also remained open and functioning for clients across the UAE and the region. In fact, both loan and bond markets in MENA grew last year. I think managing liquidity was paramount at the onset of the pandemic, and yes, mainly driven by sovereigns and GREs. But that kept us all extremely busy, helping clients secure funding and lock in backstop facilities to support their operations. I think there are some key economic sectors we continue to watch. The pandemic's likely to have changed the way we live and work, and that'll have impact on the real estate sector. And while we've seen the price corrections and we've begun to see a bottoming out and a slight increase in transaction volumes, I think more importantly is government initiatives to control the supply, which should help stabilize the sector. Beyond real estate, I think airlines, hospitality, and retail were hit very hard. And while that, of course, is not specific to the UAE, the sector was hit at peak season by lockdowns and travel restrictions. And again, with the rollout of the vaccine and eventual easing of restrictions, we expect these sectors to bounce back quickly. And we've seen the numbers back in December here. Now, again, the oil economy, as we all know, wasn't immune. Demand shocks last year or unprecedented volatility in the markets. That space remains to be seen, but we are hopeful that it will stabilize. I think for 2022, we're forecasting the UAE economic growth to rebound. I think with the GDP growth of 2.4 to 2.5% at the very least. Again, the view supported by the continued rollout of the vaccine around the world, with the UAE making an excellent progress so far. I think that progress plus, the government, relaxation of foreign ownership rules, the granting of golden visas, supporting SME and startups, plus the upcoming Expo provide a strong catalyst for a rebound in activity. And in fact, we've seen pockets of recovery across the economy already. I think, again, stabilization of oil will provide us a platform to return to growth as key energy-related projects progress. Again, the UAE's Executive Council has announced capital investment of close to $122 billion over the next 5 years. And while the pandemic, of course, has created the need for a response and adjustment to key projects, not the least postponing of Expo, I think the UAE's broader economic and social development plans remain intact. Indeed, His Excellency Dr. Sultan Al Jaber mentioned recently that the strong ties between the US and UAE provide excellent opportunities for US investors, not just in energy, but also AI, biotech, agritech, and beyond. And I think, given our presence across the region and globally, we continue to support these inward investments to the UAE and the wider region. And through our branch in Washington, I think we're very well positioned to continue to support these trade flows both ways. We personally are seeing an increased level of activity, deal flow, and pipeline as we look to support clients and the economy. I think in conclusion, I believe the UAE economy is very well positioned, and it was able to weather the worst part of the impact of the pandemic, thanks to the agile and quick government intervention and support, while still managing to maintain a focus on its long-term development plans. And while we were, of course, continuing to see challenges, I think the country is very well positioned to return to growth and continue to remain at the forefront of the region's economic development. Thank you.
Monica, thank you. And I really appreciated that overview. One question I'm just going to put on for the panelists now that I want to think about for the Q&A session is the reopening of the Qatar market to friends and companies and banks in the UAE. And anyone that wants to comment on that at some point along the way, I think that's something our attendees would very much like to hear your views on. But with that, I want to turn the floor now to Declan Haggerty from J.P. Morgan Chase, which is the largest bank in the United States. Declan brings an incredible wealth of knowledge about the UAE, having lived and worked in Abu Dhabi for over 2 decades. Declan is the general manager of J.P. Morgan Abu Dhabi office and managing director in J.P. Morgan's Global Corporate Bank. He heads J.P. Morgan's Abu Dhabi office and is also responsible for coverage of key government and corporate clients across the Middle East and North Africa region. Declan, the floor is yours, and thank you so much for all your support.
Danny, thank you very much, and thank you to Handed and Dr. Monica for the comments as well. It's great to be involved in a panel with such a high quality group of banks and individuals. And maybe if I can start by picking up on something that Mohammed mentioned, which is the nimbleness and the decisive action that we saw in the market in the UAE last year. So if you go from a period in April, May last year, where you had significant drawdowns of facilities as people were wondering what was going to happen in the second half of the year, that the liquidity that was injected into the market to provide that base, the credibility the UAE always has in providing that liquidity from the resources that it has, to the point then where when it came to the reopening of the markets, bearing in mind that the Gulf had the extra complexity of the oil price gyration as well as everything else, to come to the position where Abu Dhabi was one of the names actually reopening the Gulf market by mid-year was just testament to the strength of how the UAE, continues to develop a good, credible, predictable, stable place in the region to do business, and took the decisions very quickly to support and underpin the market in the way that's been described by the opening speakers. I think it's also, last year again was also a year where the attractiveness of the UAE market continued to develop. So even in the extraordinary year that we had, the UAE continued to attract increasing levels of inward investment at the same time as being in its more traditional role of being a capital exporter and taking advantage of investment opportunities elsewhere in the world, both for financial return for the country going forward, but also to continue to grow its stake in industries that are going to be meaningful and important to the economy here going forward. It was a strong year and finished very, very strongly. So I think that investment focus, both inwards and outward, is going to continue to be a theme this year and in future years. Also, as Khalid and Monica were saying, the financing market, underpinned by that liquidity, was strong. Confidence came back. I think the Gulf markets and UAE in particular accessed that market across a number of different pockets very efficiently last year to build that liquidity into the system here. You continue to have a consolidation and a growth in governance and heft in the entities, particularly in Abu Dhabi, as making sure that you have that scale for the global stage continue to develop. And in Dubai as well, the three T's, tourism, transport, trade, that are such strengths of the economy, were at the eye of the storm in terms of COVID. But you can see how the competitive elements of the economy can come back as the recovery comes through. So, similar to what the opening speakers were saying, plenty of activity last year to keep everyone busy, an attractive, credible market in which to do it, and plenty to be getting on and doing this year as well, Danny. So I'll stop there for opening comments and look forward to the questions.
Sounds great, Declan. Thank you very, very much. I'd like at this point to introduce Sami Kaelo, Chairman and CEO of Morgan Stanley Middle East and North Africa. Before I say anything else about Sami, I just have to say he's been an incredibly reliable advisor, colleague, and friend in my role as president of the Business Council since the very beginning. And I really appreciate that, Sami, very, very much. Sami became the chairman and CEO of Morgan Stanley Middle East and North Africa in 2013. He has been part of the MENA leadership team since the Dubai office opened in 2006, and is also a board member of Morgan Stanley Saudi Arabia. Between Sami in Dubai and Declan in Abu Dhabi, we have a really, really good understanding of how the key U.S. banking and financial services, institutions, what their concerns and issues are. So I really appreciate both of you for your inputs. But Sami, the floor is yours, and please tell us what's on your mind.
Thank you, Danny, and good morning in the United States. Good afternoon, good evening here in the region. It's tough to add to what my esteemed colleagues have already said. I agree with what they say. What's really interesting and what's happened over the last, I would say, 12 months, and it's really important to understand, is that the UAE was faced with a double whammy, a double hit of declining oil prices, a shrinkage in the amount of production that was coming out of the region. At the same time, given the UAE economy, I think of it as Abu Dhabi being the ballast, where it's got the tangible revenue sources and so forth, and petrochems and so on, while the rest of the UAE's got the intangible stuff, whether it's trade, commerce, tourism, finance, and so on. Those also suffered due to the lockdown and so on. So that was a pretty tough thing to bounce back from. And when you look at the way the UAE went about life, is that the austerity measures that were enforced on the Emirates were, in relation to the rest of the GCC, were not as large in magnitude. At the same time, while the lockdown was really pretty strict in relation to other countries, which you might argue facing towards the West were gradual, it was pretty sort of abrupt. And that sort of afforded the UAE to somewhat manage the numbers in the early stages of the pandemic. Now, what's really important is to try to understand what the UAE did in the global markets, in the capital markets. I'm not an economist, and that's what I get involved in and what I see. And it's a lot of landmarks happened in that time. The GCC borrowed about $100 billion, whether it's sovereign or just slightly below the sovereign level. The UAE accounted for about 15 billion of that borrowing. Just to contextualize that, that is about just a little bit over what they borrowed the year before. What's interesting about what happened last year, though, in 2020, is that there were interesting landmarks in that borrowing. At the sovereign level, the UAE was the first credit, sovereign or otherwise, in the region that borrowed in a 50-year maturity. Now, and when you go beyond that and you look at who else tapped the market, you had the ICD, which is an unrated credit. Abu Dhabi, by the way, is AA rated, the highest rated sovereign in the region. Then you had Dubai Aerospace recently doing a very interesting deal. It's a BBB minus credit, which is borderline high yield junk. And the participants in all these credits are international investors across the globe, whether it's 50 years or shorter. And then if you move to step below and you go to ADNOC, where they've done a lot of interesting things. They brought in equity investors, 40% of their pipelines, about the same percentage or lower percentage in the real estate portfolio, and ADNOC distribution, and equity investors mostly from developed countries, US, Europe. This is long-term money. This is money that comes from pension funds and things like that that are looking for safe havens. Investors like safe havens. And when you look at the region here, the things that challenge that argument are either the geopolitics or the price and direction of oil prices, because it's mostly a single or two commodity region. And the geopolitical developments, the positive developments and the trend of these developments contributed in many ways for the appeal of the UAE as a credit for international investors to invest in. So whether it's the normalization of relations with Israel, with Qatar, and so on, all that is indicative of a stable region or a stable UAE that is quite serious about addressing whatever it is uncertainty that scares investors because it's looking for long-term partners, and it's succeeded in achieving that. So our expectations for 2021, given the lack of extreme austere measures that were enforced on the UAE in relation to the surrounding countries in the region, it's likely that the UAE will not rebound at the same pace as those countries. It will rebound, it will recover, and it will do well. But those countries that had to impose far more aggressive measures are likely to see a snapback, which is sort of bigger in magnitude. However, the lasting effect of the factors that will contribute to this rebound are stable and far more long-lasting, whether that is in tourism, the Expo 2020, the spillover of some of that into the real estate market, and so on. Thank you.
Thanks, Sammy. So the takeaway from I think what you're saying is the UAE snapback will occur, but it's going to be more slower, more steady, more methodical, and more stable in the long term. Is that fair?
Yes, that's right.
All
Yes.
right. Excellent. 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 With that, if I could introduce Ms. Carla Slim, Standard Charter's head economist for the Middle East, North Africa, and Pakistan. Carla provides on-the-ground analysis of macroeconomic and financial developments in MENA and Pakistan and Turkey to external and external stakeholders of the bank, including clients and senior management. Based in Dubai, she contributes regularly to global research publications and regularly appears in the media. We are fortunate to have her here today to share her experience and insights, and we are very pleased that Standard & Chartered had become a member last year with the Business Council. Thank you for that as well. Go ahead, Carla, the floor is yours.
Thanks very much, Danny. And I definitely have the toughest job of going last after such a great lineup. So thank you for the council again for the invitation.
We saved
what I'll do,
Carla, we saved the best for last, please, please.
That's what I like to think. But what I'll do is actually build on Sammy's comments on comparing the UAE recovery to the global economy and the global recovery. I'll also share some comments on emerging markets because we are an emerging markets bank. And I'll also share some perspective from a Standard Chartered institutional level, how we see the financial sector also aligning with the government after the COVID shock. So I'll keep my comments to these sort of themes, and then we can take it to Q&A. With regards to the global economy and how we see the global recovery shaping up, we are expecting global GDP growth to bounce back to 4.8% in 2021, and that's after a contraction of 3.8% in 2020 by our estimates. Now, this 4.8% number for the global economy might seem slightly on the higher side because the global average growth for the past decade was actually 3.7%. But despite the fact that we expect global growth to be slightly higher than the average of the last decade, we still see that the output gaps created by the COVID crisis are unlikely to close this year, and several regions are likely to have to wait until 2022 for these output gaps to close. And specifically here, we can single out the Euro area and India as well from emerging markets. So just broadly, a few comments also on emerging markets. As a bank and as a research team, we still remain quite constructive on emerging markets broadly. There are several reasons for that. First of all, from the US perspective, lower for longer rates are going to be likely supportive for emerging markets. We think that 10-year yields will probably rise to 1.5% by year end, but still, despite that, the hunt for yield in emerging markets will likely still be there in 2021. And we are singling out several emerging markets, whether it's in Asia, those that have benefited from the China recovery, quite rapid recovery. We're actually expecting China to recover to 8% growth in 2021 after not seeing negative growth at all in 2020. This is not only a China story, it's also benefiting some of the countries in Asia that also are benefiting from the recovery in global trade. So we're seeing a pace of recovery in global trade that's quite rapid, more so than people might have envisaged in the initial onset of the crisis. There are some specific sectors when you talk about electronics and technology, but definitely, positive for EM as well with this recovery in global trade. But also the US election outcome with President Biden at the helm and Janet Yellen's recent comments about focusing on the consumer and getting small businesses back on track, and shifting the fiscal focus to later after the recovery. All of this narrative in the US does keep us bearish on the US dollar. And so there are pockets of opportunities in emerging markets for investors. Now, how does MENAP and the UAE specifically fit into that broader picture? We definitely started the year with some positive news, either when it comes to higher oil prices, also Saudi Arabia's decision to unilaterally cut oil production by 1 million barrels. Also, that supports the rest of the Middle East region, not just the oil exporting countries, but also the oil importing countries, because if we look back in the last 10 years, oil importing countries have also suffered in times of oil price shocks and lower oil prices. And also the Qatar resolution. So the Qatar resolution, in our opinion, is set to provide some added impetus, not just to the economic recovery of Qatar, but also to the economic recovery of the UAE. As Monica was saying in her comments, the monetary stimulus that we've seen definitely was very strong in the UAE, but also in the GCC. We estimate that there was around 15% of GDP monetary stimulus that was rolled out in 2020. In 2021, we don't necessarily expect that shift to go more towards fiscal policy. We do think that with still oil prices remaining still quite low on a historical basis, and oil production not necessarily rebounding very quickly, even though the OPEC agreement did not manage to extend oil production cuts much further into the year, we still expect oil prices to average around $51 per barrel in 2021, which is still below some of the fiscal break-evens of the GCC. And so really the focus is the economic recovery in the GCC that depends on the speed of the vaccine rollout, that depends very heavily on the speed of the global economy recovering. And that's why as well, we're very focused on the Qatar resolution and how it plays out in terms of alleviating some of the geopolitical concerns as well in the GCC as we enter 2021. Now, for the UAE specifically, our forecast is growth to return to around 2% in 2021. We are expecting, specifically in terms of sectors, logistics and tourism, to recover. We've already seen this recovery given that the UAE has positioned itself as being open for tourism, open for business. We did see a contraction of around 50% year on year in logistics and tourism in Q2 2020. And so Expo 2020, which is supposed to be held in October this year, and the Qatar resolution are meant to add impetus to this recovery that's already underway. Just finally, to conclude on how we view financial institutions and the financial sector's basically alignment with the government in a post-COVID world, definitely we have seen that financial institutions have become ever more aligned with the government's priorities, whether it's about diversification, the diversification agenda, and financing the non-oil sectors, but equally on the energy agenda, whether it's also the government's commitment to continue expanding its oil production capacity, or on the renewables and ESG front. We are seeing ever more alignment between financial institutions and the government. And on the international financial institution side, definitely the use of the network in bringing foreign direct investment in the country is something that we've noted, not just at Standard Chartered, but in general in the sector. So I'll stop my comments there, but definitely we'll be picking up these themes, I'm sure, in the Q&A as well.
Carla, thank you. And that gives us roughly 25 minutes or so for some discussion here. I appreciate it very much. We have one question in the chat box, which we'll get to here in a few moments. If any other attendees have questions, please put them in the chat box. But I want to ask, let's just deal with the immediate issue. And I want to ask Mohammed a question about COVID. The United Arab Emirates has had a stellar response to COVID, to the COVID crisis when you compare it to other countries around the world. With regard to the most shots in arm, it's only second to Israel. It's implemented mass testing. It's introduced the stimulus measures that you've all talked about. and it's rolling out these vaccines, not just a vaccine that it helped develop jointly with China early on, but also the American and other vaccines that are now being rolled out as well. How has the UAE, Mohammed, just give us a few more points on how the UAE's response to COVID in the last year and in the next 6 months really has impacted your forecast for 2021. I know you said a little bit about this already, but a few more points, if you will. Dig down a little bit deeper.
Sure, Danny, thanks. Well, look, I mean, look, we were actually at the forefront initially of, lockdowns, rules, discipline around, how to operate once the pandemic hit. And I think, enforcing these rules and regulations was key, and everyone signed up. I mean, it was an effort by the population, monitored and implemented by the government. I think, it's also very brave to have, taken on board here the trials for, the Chinese vaccine and some of the other vaccines as well. And that helped, I think, in securing doses for the population. And they've been very, supportive. The healthcare system has gone over and above to provide, the facilities, the services, and ensure, at the expense of the economy initially. But then once we found the balance, I think we're in a much better place. And again, we're the second, I think, country in the world here in terms of, as you said, shots in arms, and they continue to manage that supply. I mean, from personal experience, just looking at how to register for the vaccine, how to go and get a shot done, extremely smooth. And I think, some of the more advanced or developed infrastructures in Europe and other places can learn from what they've done here.
So I guess I would ask real quickly, just a follow-up, two-finger follow-up to that. If the UAE is so far ahead in this regard, but Europe and the US and other places are not, does that drag the economy? Does that slow progress on the snapback, as Sammy used that term in the UAE, or not? I mean, for your projections for the next 6 months, for the next year.
Look, not necessarily. I mean, we've opened up here, I think, far ahead of a lot of other countries, and I think things opened up. People wanted to go out, wanted to spend, wanted to live back, the way they were living before this whole crisis and pandemic, and go about doing their business. But again, obviously it depends on how the vaccine gets rolled out globally. Again, as we've said, the tourism sector, airline, retail are big parts of the non-oil economy here. So there will be an impact, and I think, I'm not sure where this is going, but if they agree on a protocol, whoever's vaccinated can potentially start traveling, lifting of restrictions, obviously will benefit here. But again, I think, the economy has adjusted, businesses have adjusted to a new way of normal. I mean, looking at our clients specifically, that operate retail and commercial businesses, they've all gone online, and a majority of their sales now, not just during lockdown, but as of today, is gone online, right? So they're utilizing different channels, different avenues of doing business, and while again that may be temporary or may be permanent, it remains to be seen. But the demand is there, and I think it will return. And as look, we saw in December, we opened it up. There were a lot of tourists coming in. Hotel occupancy was up to 70%. So, and that's in a short period of time. Now, again, with the vaccines being rolled out and protocols agreed between the countries, I expect that to snap back fairly quickly, at least on some of the non-oil sectors.
Thank you, Mohammed. Declan, this year in December marks the UAE's Golden Jubilee, with the UAE turning 50. how's the economy changed since you've been on the ground for such a long period of time? And how do you, I guess, and how do you foresee it changing even more in the upcoming year is the most important question. Getting to the question of what are the opportunities. Dear friend Ruth Fry in the chat box, puts it bluntly and says, "Is this the year to invest in the UAE, or should we wait for a more full recovery towards 2022?" Any comments on that, with this being the Golden Jubilee year coming up, and also as Monica and others have mentioned, Expo 2020, the Hope mission to Mars, some other big events that are happening in 2021. Your thoughts?
Thanks, Danny. I think that one of the things to me that has always marked out the UAE is the delivery on ambition that you get in the country at both ends of Sheikh Zayed Road. And I remember you talked about the length of time I've been here. I lived in Dubai for a portion of that year, not all of the time in Abu Dhabi. And I remember when, the old Hard Rock Cafe, those of you who remember the double guitars on Sheikh Zayed Road, which you wouldn't even notice it now with Jumeirah Lakes, Towers and the Marina area, that there was nothing there. So Dubai real estate monetization had not started when I arrived. In Abu Dhabi, at the time, it caused quite a bit of a surprise when Abu Dhabi started on the privatization of its power network, right? So a country adjudged to be one of the richest, and one of the least requiring of financial know-how, but actually focusing far more strategically on the efficiency of doing IWPPs and actually bringing in third-party money even in the late 90s. You could see where that was driving to. So to me, the Abu Dhabi parallel of the Hard Rock building in some ways is the old ADNIC, well, the ADNIC tower that's still here in Abu Dhabi, which is the offsets building, the genesis of Mubadala, which is very important in a council context as well. The Dolphin establishment and the development of the entities that we have here today that are big, mature, multi-billion-dollar entities that have developed from scratch pretty much in that period, and the substance that has been built up. You then move into the next round of maturity, and you have a level of planning here. And when I mentioned delivery of ambition earlier, you've had previous 2030 plans, a number of plans to build out the diversification that a number of the panelists have talked about. The country is now embarking on a forward-looking next 50 years of the country. So you'll have Expo, which now neatly coincides with the 50th anniversary of the country. And I think there are a few countries as credible in terms of that forward-looking, in terms of the thoughtfulness and the delivery as we have here. So, I think a number of the panelists have also referred to the evenness of how the country continues to move forward. Even whether it was 2001, 2003, oil at $8 in 1999, oil at $140 in 2009, when the rest of the world had already started to seize up. I think the cycles here, we've continued to manage to plan through them. So I wouldn't be looking to time too much. I mean, I don't think there's going to be an uptick that you get in terms of timing in 22 that you're not going to miss out by, or you're not going to have opportunity cost by coming in earlier than that. To me, it's the way that, through all of these cycles, the country has continued to move ahead and to implement the agenda that it has is what kind of sets it apart. And if you plan your investment on that basis, then I don't think you'll be disappointed.
Thank you, Declan. Carla and Monica. Monica first and then Carla. Just jump in really quickly. You both mentioned Expo 2020 in your remarks. Just 2 or 3 sentences each about the importance of that for the economy going forward. And then Sammy, I'm going to come to you on the investment law. We have a couple questions on that in the chat box. Monica.
Well, I think it's going to be a very important bounce back of tourism, a lot of the key sectors. The timing is actually very good because it only starts, as Carlos says, in October. So hopefully by that time we have more global momentum with the vaccination program. But I think also if you see sort of the themes that they've developed, the future, sustainability, technology, it's also very central for developing these ideas, for developing new technologies in the UAE, for creating new interlinks as well. So I think there's also a lot of discussion on how we build on these going forward. And I think very much the focus of policy that we're going to see going forward is not on the sectors that are quite established. Of course, policy will look to maximize their benefits and continue to expand these, but the global economy is changing. And building on what Declan said, that, you know, the UAE changes with them. So a lot of the policy focus is attracting and having the correct framework for these new technologies, for bringing in the labor force. And I think a lot of the companies that are going to come, a lot of the themes of Expo 2020, really sort of look into these sort of areas and new developments. But I think especially for the traditional industries, tourism, aviation, hospitality, that have very much been the key stress points of COVID, this is going to provide a solid response quite quickly.
Thank you. Carla, do you want to jump in and say a few words about the importance of Expo and the impact?
Yeah, thanks, Danny. And I'll maybe, if you allow me, I'll also add a few things on your previous question about how the UAE economy has changed as well over the last couple of decades, if that's fine. Great. So on Expo 2020, I won't repeat what Monica said. I'll just add one point on the sovereign wealth fund's role in looking inwards into the economy, because as Monica was mentioning, this really is a story about searching for new growth drivers and moving away from the traditional growth engines, tourism, logistics, trade, and into innovation and technology, the knowledge economy, and the policymakers have been very clear that that's the way forward. And it's also in this context that we view the Israel peace deal as well between the UAE and Israel, and that could give scope for more collaboration on sectors and projects in that field. So definitely also the sovereign wealth funds have a role to play in pushing for new growth drivers. And we expect them to also play a role in these new sectors, moving away from the traditional growth engines. Because for the UAE, it's not really an issue of liquidity. I mean, between the central bank FX reserves, the sovereign wealth fund assets, there's plenty to go around to boost economic activity and implement fiscal stimulus. It's more an issue about the fact that we've had negative inflation since the start of 2019. Because of excess capacity in the traditional sectors. And that's why it's so important to get the areas and the economic sectors right when making these investments. That's on the Expo point. On your previous question about how the UAE economy has changed, I just wanted to throw a couple of figures as well to support the comments that have been made. I think if you look at the size of the non-oil sector and how it's changed between 1985 and 2019, we do see that actually the non-oil sector grew tenfold between 1985 and 2019. And diversification just doesn't stop at the size of the non-oil economy. It's also about the size of the non-oil sector government revenue, or the revenue that the government collects from the non-oil sector. And if we zoom in just between 2010 and 2019, non-oil government revenue actually more than doubled between 2010 and 2019. So that's just to show the resolve also of the government in diversifying away from oil. It's not just a plan, it's not just a vision, it is showing up in the numbers. And it also has to do with the external sector, which is also about diversifying away from oil proceeds when it comes to foreign currency, FX proceeds in the context of the fixed exchange rate regime. And the dollar peg. And also when we see Abu Dhabi or Dubai tapping international capital markets, it's important that we keep in mind that that not only helps in terms of financing, it also helps in terms of balance of payments dynamic and bringing in dollars into the country. So thanks. These are my comments.
Thanks, Carla. My good friend Abdullah Sharafi, a panelist, has a question about the UAE central banks and the interest rates. You've touched on it broadly in some of your answers. If you all would look at his question and see if you want to offer him something back in the chat box. I don't want to go down too deep into that specific issue, but he does raise an interesting question. Sammy, the UAE is always at the forefront of making reform in the broader region, and that's one reason that keeps it, as I like to say, ahead of the Joneses. What are your thoughts on the new investment law, 100% ownership, all of these aspects of recent reform that the UAE has introduced? And then a question for all of the panelists to close on after Sammy's done on that, to think about, is the impact of the Abraham Accords. We can't leave this discussion without raising that issue. So Sammy, I'll ask you to talk about both, and then I'll go to the rest to talk about Abraham as well, please.
Thank you. My view on that is that it's all very, very positive. What the UAE has done by introducing and embracing these laws is it's attracting two things which are fundamental to the continued growth of the economy and the country and the stability of that growth for the long term. Firstly, it attracts human capital, intellectual capital, mind share, and so forth, boots on the ground that are here to stay. And with that, you get FDI. And that's, for any country, not just the UAE, is something that you always would like to have on your side. It empowers, it enables growth, ideas, and so on. What we find is that the lack of clarity on certain regulations and rules in any setup, in any environment, tend to deter capital flow in or out. And the UAE has been, I think, over time has hemorrhaged capital out more than it has with the people that have come to work here or whatever to keep that generated wealth in the country. In our efforts, when we engage with international investors from the Far East, from the East, or the West, it's always when we're able to advertise laws such as the ones that have been coming online, that is something that makes the decision-making far easier and in favor of the UAE. So I think that is very positive. And partnership that can sort of be for the long term and so on. Some of these laws are done at not so much at the institutional level, so we don't necessarily see the impact of them in what we do. Our clients are institutional in nature. The Abraham Accord, I think that's, there's the political side of it, the stability in the region, what it brings. It counterbalances a lot of other things which were negative and to the detriment of growth across the region. It's a good thing ultimately to figure out how you can bring peace to the region. It's been quite a challenge, a generational challenge, and it's taken a lot of courage, determination to make that stick and happen. Just from a contribution to economic growth and so forth, we believe that 16% of those Israelis that have been traveling to the likes of Turkey, Egypt, and Jordan are likely to redirect their trips to the UAE to spend here. They've been coming already. That's about 1.4 million tourists. I think there's been in about 4 or 5 years ago, maybe Dubai itself has seen multitudes of that number, but that number over time can grow. And obviously is a boost to now we have a sort of a united front on the tourism for the UAE, and that could be of great benefit. That's one side. Again, we talked about intellectual capital, the sharing of mind share. of resources and so on. There are a lot of partnerships that can find a host, can be hosted here or there, and where it can be enabled and take place. I'll let my colleagues answer. I know we don't have much time left.
I'm sorry, we have 4 or 5 minutes left here. Who else wants to jump in on the Abraham Accords? Declan, you have something you want to say? Monica, Carla? Mohamed, I think you want to stay away from that one for right now. Maybe, I don't know. But please.
I think Sami summed it up very perfectly.
All right. Does anyone want to take a stab at, just on the Abraham Accords, the 3 or 4 or 5 verticals that you think there's going to be immediate opportunities for growth between Israel and the UAE, and importantly for Jewish American and other investment coming in from the US to sidecar and partner?
I'll have a stab at this. I think, tourism is going to be one area. I think there's going to be the logistics sector. We've already seen a number of companies forming joint ventures. I think capital flows are going to be a point of interest as well. We had some calls with our colleagues in Israel when the Accord happened, and due to their pension schemes and saving schemes, there's a lot of opportunities for direction. There's already interest that we're seeing in the real estate sector, but I think the one area that's going to be very, very important, and which Carla and others touched on, is on the technology side, and to develop on those areas, the agro industry, the ability to define the desert economy into an agricultural center. That's going to be very important. Security, etc., are other areas, but I think the technology side would be particularly of interest as new sectors are developed. So I think there's many areas that we can see interlinkages.
Okay. As a final note, Carla and Sami, Declan, anyone else, are there any policy areas, reform areas that we should be particularly on top of for 2021 in review? Obviously, the new digital law is about to come out. We've all been following that carefully. Any other areas that you see broadly affecting business that we all should be watching carefully? Any thoughts on reform from the government?
I think the direction of traffic is very positive. It's very reassuring. I think the continued increase in foreign ownership limits in UAE institutions that are listed on the stock exchanges is something that's very good. I think further consolidation on the stock exchange front is a good thing. Investors look for a large liquid financial markets that they can invest in. There's a competitor next door to the UAE, Saudi, which is a large market, somewhere, I don't know, close to 450 billion in capitalization. And international investors may decide just to take a view on the GCC and invest in that market rather than just come here and do the homework. So things like that, I would say.
All right.
I'd agree with Sami. I think that's a great point in having markets that are commensurate with the size of the economy as efficient as possible. I think the continued build out of ADGM, DIFC, positive benefit in the country. And I think the decisiveness that we've talked about from the central bank, particularly over the last year as well, bodes well for the development of the financial sector in a uniform way going forward. So I'm positive on how the sector is developing. I think making sure that the UAE remains at the forefront from an attractiveness point of view. Remember, we were talking earlier about some of the infrastructure deals that were inward investments into the country. When those deals were being looked at as recently as 2-3 years ago, most of the large funds didn't actually have country limits for the UAE. Right? By the time last year's deal was done, nearly everyone did. And that shows you how quickly this country can marshal when it needs to, and on many of the themes that we talked about through this call.
Declan, thank you. And I'm going to remember your quote on commitment to delivery at both ends of the Sheikh Zayed Road. I think that's really, really important. On that note, ladies and gentlemen, let me offer my thanks to all of you for your excellent comments, and for folks on the call, attendees. Just the caliber of the advice and support that we get from groups and companies like this is just amazing. Really, really appreciate it. We will have a session tomorrow with members from Ake and Gump, former legislators in the U.S. Congress, who will talk about the Biden administration and the new U.S. Congress. And on Monday, February 1, we will have a session with Her Excellency Sarah Al-Amiri, the UAE Minister of State for Advanced Technologies, who's going to talk about the HOPE Mars mission's arrival at the Red Planet. And in the second week in February, we will have a session with His Excellency Faisal Banai to talk about the UAE defense sector. So those are our three big upcoming sessions with a lot of other ones sprinkled in. We really appreciate your support and help and look forward to seeing you on future webinars. Everyone in the UAE and in the Gulf have a wonderful evening, and the United States have a great Monday. Thank you so much. Take care now.